Good evening, everyone. It's my great pleasure to welcome you to this presentation in UCI Law's COVID-19 and the Law series. And today's talk is titled, Lessons from the CARES Act, Banking for All in the Time of COVID-19. Today's discussion features UCI Law Professor Mehrsa Baradaran and will be moderated by Michelle Jordan, and I'll introduce them both in a moment. But first, I want to recognize the people who made this evening's event possible, and they are Rebecca Bergeron, Jillian Henry, Dennis Sloan, and Marianne Soden. Thank you so much for pulling together this program. So we are so fortunate to have Professor Mehrsa Baradaran at UCI Law, and she joined our faculty in 2019. Professor Baradaran writes about banking law, financial inclusion, inequity, and the racial wealth gap. She is a prolific scholar and has authored 2 books, How the Other Half Banks, which is published by Harvard University Press, and The Color of Money, Black Banks and the Racial Wealth Gap. Her Color of Money book has been highly praised, including recognition as the best book of the year by the Urban Affairs Association. Professor Baradaran and her books have received significant national and international media coverage and have been featured in the New York Times, The Atlantic, Slate, American Banker, The Wall Street Journal, The Financial Times, and on NPR's Marketplace, C-SPAN's Washington Journal, and PBS's NewsHour. Professor Baradaran has advised U.S. senators and congressmen on policy. She's testified before the U.S. Congress and spoken at national and international forums like the U.S. Treasury and the World Bank. In fact, just this past Thursday, Professor Baradaran testified before the U.S. House of Representatives Committee on Financial Services, and she testified on the topic of inclusive banking during a pandemic. Professor Baradaran is a brilliant lawyer and a thought leader in her field, and we are so very fortunate to have her here at UCI Law. Welcome, Professor Baradaran.
Thank you so much. That's too generous.
And now it gives me great pleasure to introduce our moderator, Michelle Jordan. Ms. Jordan is principal of Jordan LLC, which is a consulting firm that helps CEOs and their companies with their strategic communication needs. Ms. Jordan specializes in issue and reputation management, crisis communications, and brand strategy. Her communications work also includes managing media relations for clients whose situations have placed them and/or their organizations in the spotlight. And as she has shared in the past, reputation is a capital asset and should be treated accordingly. Earlier in her career, Ms. Jordan also served as president of the LA office of the GCI Group, which is a division of Gray Advertising. She also headed corporate communications for Digital Pictures, which is a pioneer of interactive video games based in Silicon Valley. She also held senior management positions with the Dillon Schneider Group and Hill & Milton in New York. Ms. Jordan was born and educated in the UK and lived and worked in London, Paris, New York, Toronto, San Francisco, LA, and Orange County. She's also an Orange County Business Journal Women in Business honoree. Ms. Jordan once said that she would like to meet either Marie Antoinette or Elizabeth I because they lived extraordinary lives that continue to fascinate. Well, the very same thing could be said of Michelle Jordan. Her life is extraordinary and she continues to fascinate, and I am so grateful that she's a member of UCI Law's Board of Visitors and for all of her incredible and valuable contributions. So thank you so much, Ms. Jordan, for taking the time to moderate this evening's event.
It is such an honor and such a pleasure, and thank you so much for inviting me, which I believe now is a cue to start, correct? So it struck me that when this series was first put together, it was really driven by the mega crisis of COVID-19. But by the time we're speaking tonight, it's been overtaken by the global explosion, the Black Lives Matter movement. And both have huge economic impact, of course, and potential consequences. And each is a full-blown topic, which you, Professor, are an expert in. If I may call you Mehrsa, it's easier for me. Thank you so much.
Yes.
I know that you can keep us spellbound for hours on either of those, but what I'm going to try we can do in this sort of rather limited time is touch on both. But what I'd like to do, if I may, is start with just a little bit more of a personal introduction to you. We certainly are well aware of your academic excellence, which is impressive every time I hear it. So in a Huffington Post interview, you described yourself as immigrant, liberal, Mormon, Muslim, feminist, lawyer, mother, who generally dislikes labels. This is your chance to add something else to your list. So I want to ask you, how did, with a background like that, land you in the scholarly pursuit of banking and the law?
Well, that's a lot of questions there. And yeah, I think the list was to defy labels, because I think once I get into one, you know, there is this rabbit hole of identity that comes with it. But yes, I grew up, you know, I'm an immigrant to the United States. I came when I was 9 from Iran. My parents were activists there, and were sort of, you know, against the Shah, but also against the Khomeini. So kind of stuck politically in between. And we were kind of expelled from the country by sort of violence and other means, and were gratefully accepted into this one by Ronald Reagan, actually, who passed you know, some pretty liberal immigration laws. And then, you know, I grew up Shiite Muslim, but my family converted to Mormonism here. You know, to some extent, I'm since, you know, a little bit rootless in religiously, but that was my background, my shaping sort of to very religious upbringing. Also have always been liberal because of my birth and my parents, but you know, I grew up in all over the country, in New York and in Iran, and in, you know, all over the country as my parents moved around a lot. And I think part of what that has given me, you know, spoke several different languages. I speak 3, and what I think I've gained from that is the ability to I can see myself in a lot of different people's lives, and because I lived in America with a lot of communities from all over, and you know, in pretty poor communities, you know, if I'm being honest, we never, you know, my parents didn't own a house until I was you know, almost ready to go to college. And so my work in inequality and poverty and racial justice really stems from this idea that I think we just people who have elite educations tend to discount how much ingenuity and smarts a lot of people who live in those vulnerable communities have to survive. And I think the narrative that we tell about those communities and poverty in general is one of irresponsibility and laziness and all this stuff, and that is just does not comport with my experiences. And so I think, you know, being in between a lot of different communities, as I am now, I don't think there's a single community that would, you know, I would feel wholly comfortable in, because I'm no longer Iranian, I'm not fully American, I'm not, you know, fully Mormon or Muslim or any of these things, but I do feel a kinship with all people who don't feel included in a way. And so I think, and then the banking research just came from my professional background, being at the center of the financial crisis in New York at a Wall Street banking firm from 2005 until 2010, just kind of like blew my mind, and how public all of the banks ended up being, and how much the Fed and policymakers were involved. And then, you know, just observing the political commentary on, oh, well, we don't have the funds for schools, and we don't have the funds for this stuff. And yet I watched, you know, from my desk, you know, Wall Street, trillions of dollars going to certain banks. And so I just, that's where my sort of personal life and my professional life meet, is looking at this just one sector of banks and equity and credit, and saying what myths have created this completely unequal society that we have now. And there's several strands of that, and I'd be happy to follow your lead and some of these questions as it relates to right now.
Well, thank you for doing that, because I always think it's so interesting when we hear from somebody to understand the background and all of those things that, of course, landed you where you are. But let's sort of come all the way up to the future, to the topic for tonight. So you've written 2 great books. How has COVID-19, and we have to now add, of course, the global Black Lives Matter response, highlighted the problems that you write about?
Right. So in a way, it's hard to be sort of, to say, to have to be like, I told you this was a problem, when it's become such a problem. So let me take just the inclusion aspect. And the hearing this past week was on trying to get stimulus payments out to people fast so that they can keep their homes and just, live. We're telling people you have to stay home. And then so they need money to pay rent. And so many Americans, more than half of Americans, it is that paycheck, every single cent of that is called for. It's food, it's rent. So what happened is, the government wanted to issue these checks, and it turned out that there was 3-hour lines in Manhattan with people coming from all 5 boroughs, like a man bicycling in from Queens to save the $3 fee because he couldn't find the check anywhere except for this one branch. So literally for weeks and weeks, there's been 3-hour lines at this one ATM for people to pull out unemployment benefits or this $1,200 stimulus fund. And then a bunch of rural areas, a bunch of elderly Americans who are not getting these funds because they don't have a bank account or they don't have a bank in their community. And so they have to wait 5 months, up to 5 months, for a check to come. And in 5 months, I mean, what rents and food have you missed? So these are problems of financial inclusion that I've tried to be kind of ringing the bell on for the last 10 years, because what happened during the financial crisis is a intensifying of some of the trends of the last several decades, which is that banks have just up and left a bunch of communities, leaving a whole bunch of people without banking services. And you think, well, who cares? Like, I don't need the bank anyway. But what that means is a lack of a debit card, right? If you get paid in cash, how do you pay your bills in cash, right? They won't accept your electricity bill, your cell phone bill. So what a lot of people have done is go to check cashers or, money, sort of payday lenders, or any of these, prepaid debit card. And these things are very expensive, and the expense is borne primarily by low-income people. The other thing is bank fees, right? Banks, most of their income comes from fees, and the only customers that pay fees are those who don't have enough, have to pay overdraft fees. And so those are the things that are highlighted. And there are simple solutions actually to this stuff. And one of the things that I've been pushing for a while is, a post office bank, right? So you could go to the post office, which still is in every community that banks have long deserted. You would go there and you would just have an ATM. You could get your check there, simple bank account with a debit card, and then you would be linked up to sort of a network and be able to shop online and all of this stuff. It's to me like such a no-brainer thing. But we have yet to adopt it.
How is that? When I was a kid growing up in England, we had post office savings accounts, right?
I know, yes.
One of mine. So how did that go down? Did it go over well, or like a lead balloon?
At Congress?
The concept, yeah.
Yeah, so I've testified several times on a bunch of different things, and every time the hearing is ostensibly about one thing, which this time was about financial inclusion, but there are, one of the things that lots of people who work in politics know is that a lot of times what the lobbies care about is more important than what are actually good ideas. And so this hearing, I think, ended up being about a blockchain deregulatory bill that they were pushing. Mostly the Republicans, to be honest, all the questions were blockchain oriented. And so you get the sense that it wasn't really about inclusion, because the simplest way to give people financial access is to give them the thing that we all use, which is a debit card and an ATM. And that's simple, very low cost, but what the thing that they seemed to want is blockchain. So I think my testimony was received well. I think it was, but at the end of the day, I don't think there is enough political power to push for something like this. And I think that's part of the struggle with passing policies like this is you need a lobby. Who's going to lobby for the unbanked people in rural America? I mean, truly, like the congressmen don't really, I think a lot of times have their best interest at heart, and they need to get reelected and they need money. So who's going to pay them? It's going to be some well-financed financial institution or some other sector lobby. And it's not poor people. So a lot of these ideas tend to sit dormant. Sometimes they get passed if there's a crisis. Often they don't. So I'm not super hopeful on that one.
Well, I hope we don't have to have another. Before we move from that, there was one question that came in earlier, and it touches a little bit on what you were saying. So I'm going to just take a hop over to that, if I may. It says, I'd love Mehrsa to address barriers to access to relief funds delivered via prepaid card. I mean, it seems such a logical thing to do.
It is logical. It is absolutely logical. I mean, you could just give people a debit card, and that is the easiest step from this is the problem, easy solution. We have the technology. We don't have to invent a new thing. We don't have to put it on the blockchain. It is there. And a lot of us actually, and the data is very clear on this. For people who earn below $50,000, their primary mode of financial sort of access is a debit card. They prefer that to credit cards, to any other app or whatever. And so you could actually just give benefits to a debit card. Now you have to have a way to like put cash on that debit card without a fee. So some of the prepaid cards that are like you would get at a store, 7-Eleven, if you lose it, it's gone. The other is every time you check your balance or you put money on it, you have to pay a fee. So what the Treasury could do is just issue a prepaid debit card, no fee. It's just your money on that card, and you can use it linked to your Social Security or whatever. It's really easy. It's not a technological issue. It's just, politics.
So is it the same as the post office? It's going to need another crisis to make it happen?
Or a really motivated bureaucrat, and I think this is where I do have faith in career people at Treasury and FDIC and the Fed. And I've worked with a lot of these people, and there are people who just genuinely get hung up on an issue and get things done within an agency outside of the political channels. And so I think that one, I do know some folks at Treasury that I think could roll something out like that in time.
Yeah. So just let's go back to the banks for a moment. I mean, they are the gateways to the monies available in the CARES Act. How have banks performed in discharging fair practices?
Right.
And
well,
from what I've heard is if you've got a great relationship with your banker, you go to the top of the list.
Yeah. And it's, in a way, it's not fair to ask banks to do more than, I mean, it's like, saying like, I'm going to put you in the tiger cage, and if the tiger bites, I'm going to blame the tiger. Like a tiger is a tiger, and a bank is a profit-oriented institution. And what we've allowed for banks to do, they're no more evil than any of us, but it's about policy and the structure. So what we've allowed banks to do is there's 5 or 6 big banks that control 80% of the market. So they've closed up all the branches that are no longer fruitful, and they've cut off the customers that they don't need, right? So this is small businesses. Most of them don't need credit from banks, so they rather have big businesses. And so when a program like this goes from Treasury and says, here's a big pot of money, and we're going to allow the banks, right, to hand it out to whoever they want. Now, they didn't say whoever you want, but basically, we're not going to put, as long as they comply with these 3 things, it's totally at your discretion. And so, they gave it to their biggest customers. And that was obvious. I mean, I was talking to reporters before this happened, and I'm like, this is what's going to happen. Anyone who knows about banks was like, this is what's going to happen. And then the reporters come back and are like, hey, it turns out it was the big clients, because of course that's what's going to happen. It's like, it's an executive compensation, right? You get what you incentivize. And so what we've incentivized is sort of a winner-take-all market in banks, a profit-oriented system, no public duties and no public mandates, and that's fine. I'm fine with banks going out for profits. I think they should be smaller and not cause so much destruction that the public has to then pick up. But I think if we want to give access to people, we just go around the banks and just give it directly. I mean, the Treasury could just hand out the PPP loans through the Small Business Loan Administration. They could do it through any agency that we have. They don't need to go through banks. So that was one of the big problems, I think, here.
I just had a comment come up, which we'll circle back on if we may, because it's relevant, about the the debit cards. And the comment is, I did receive my stimulus package via prepaid card. 4 million Americans did, but the problem is how it was packaged, looked totally like a scam, and includes small but still ATM and other balance fees. Apparently people were throwing them out. That's heartbreaking. That's really appalling to hear.
Yeah, so some people who were already set up on the system of Treasury did get prepaid cards, but yes, there were fees. So this is the problem: is they have to go through some other third-party servicer to get these fees out. So it's either Visa or whatever, and they have to take their cut, right? So they're not going to do it for free, and so they have to, charge fees and whatnot. And what I'm saying is, put it in the post office. The post office is still one of our last democratic organizations. It has a public mission to serve every community regardless of cost. The post office will come to your house way out in the boondocks, even if they make no money from it. And that's like, per the US Constitution. And that's why, in your home country and most European countries, most even developed or other sort of countries in Asia, South America, all over Africa, they have postal banking, right? So, and the US did too. And this is because the post office is a natural sort of public institution that is available.
Yeah, not for profit.
No, not for profit, exactly. And so, so this is the thing is, like, you need to give the debit card, but you can't charge people. This is just money that, because here's the thing, I mean, those of us who have enough money to have a bank account, I don't get charged when I use my debit card. Yeah. I don't get charged when I go to my bank and put money on or take money out. They do it free for certain customers. Because the payment system is a federal payment system and banks get access to it. It's all public. And so we just charge a toll to poor people. And that, I think, is just fundamentally unfair.
So we're going to dig a little deeper into that in a moment. But before we get too bleak, what's worked?
What's worked in the past? Again, postal banking worked in America. So
I'm talking actually in regard to the CARES Act. I know it's a little bit early.
Oh, what worked? Yes. Oh. The stimulus payment, the unemployment benefits were quite healthy, and I think it was a bipartisan bill, and I think it was fast and it was effective and it went to the people who needed it. Now, there were some things that they had to come back to increase. And of course, there are ways to critique it, but that was great. I think that the spirit of the PPP, the small business loan thing, if it had been administered to actual small businesses, would have been great. I think a lot of the, investments in some healthcare industries and hospitals were long overdue, but we should appreciate that too. The Federal Reserve just this week issued a new monetary policy sort of lending facility for small businesses. The first time they've ever done that, despite lots of people pushing them to sort of be more inclusive in their monetary policy. They just did that. It's too soon to say, but it's a really great move. Just today, there was a Senate hearing in which Senator Brown, Sherrod Brown, who I've worked with quite a bit and I really respect, asked the Fed to consider how their policies affect racial equality. And it was just a really stunning, and positive thing to explore. And I think the Fed has been receptive. I mean, they know that it is a public accounted it's an institution that is accountable to the public, and this is the public has demonstrated that they care about this. I mean, that is what the people on the streets are saying is like, enough, do something. And I think every agency, especially the Fed, but inclusive of the Fed, needs to focus on how their policies have caused these problems, because it's not just the police, right? It's not just, the police is just the most obvious and horribly salient feature of a whole system, but it's the lenders, it's the people who been foreclosing on these homes, it's the banking deserts, these are grocery store deserts. Fed monetary policy. So during the financial crisis, when the subprime crisis blew up, the Black community lost 53% of their wealth. That's right. Which they have not recovered, and the Federal Reserve, instead of putting in trillions to save homeowners, that was one option very much on the table. They chose instead to buy up the toxic assets from the banks and let them recover. So we're talking about Goldman Sachs and the investment banks. Let them recover 100 cents on the dollar invested and let homeowners get foreclosed on. And so that is the kind of stuff that is the back burner fire that then you get, you create these unequal structures and then you light a match, and how do you expect people to sit at home? And what's been heartening about this wave of protests is, I mean, I joined one in San Clemente, that if the fact that like San Clemente had hundreds of people out, you know, I just think this one has just gotten to people, I hope, in a way that it looks to be that you have a majority of people demanding change. So I'm hopeful.
So I'm going to come back to that in a second, but you touched on obviously the fact that you felt that as a result of that what has just happened, there's a move by the feds to take another look at this. What do you expect? What do you expect? What do you hope the banks are going to do? I mean, I was reading just yesterday that I think it's B of A, Wells Fargo, I think Morgan Chase, they don't have, and there may be one more, they don't have one Black in senior leadership. So, I mean, I could say what's wrong with that picture. We know what's wrong with that picture, but what should we expect of the banks?
I am the type of person who I don't think we can wait on corporations to lead the way towards social change. That is not, they are structurally not able to do that. So I think what we need to do is create policies that incentivize the right kind of thinking, right? So I don't care if JP Morgan, I mean, you know, I saw this picture of Jamie Dimon outside Chase Bank, or JP Morgan, I don't know which CEO, which bank, but he was kneeling, you know, in protest of Black Lives Matter. And, you know, my response was like, get up, go back inside and give people back their homes, right? Cut out the performative justice, right? So even if, and the lack of diversity is appalling, but, you know, even if you bring in the diversity and your policies still create these structural inequalities, that's not enough. And so I don't think JP Morgan is going to up and tomorrow say, oh, we're going to stop, you know, exploiting these communities, because there was profit there. There's always been profit in that exploitation. And so what we need to do is say, you know what, JP Morgan's going to be JP Morgan, but we can stop that exploitation by saying you may not sell this kind of mortgage. You may not, you know, be so large and so powerful that your lobbyists can go to the Hill and buy whatever legislation you want. I mean, that's essentially what happens now. We have 5 or 6 lobbyists for every one legislator on Capitol Hill. Yeah. So any person who tries to pass policy that says, okay, we got to, you know, make JP Morgan less implicated in this racist system is going to face 5 lobbyists with money versus who? I mean, who really is on that other side? And so I think those are the things I want them to have less power over people's lives as opposed to waiting for their hearts to change and for them to really look out for the interests of people. I mean, I would love for them to do that, but in the meantime, I think we need to have the society that we want instead of what the society that JP Morgan decides they want to provide us, right?
Well, you know, it's interesting you should say that, because I read a recent study and it was really about why don't the underserved trust banks? And it was appalling to me that 25% of US households are unbanked or underbanked. And the survey indicated that 50% say it's thus because 50% don't have enough money to keep in the accounts, geographic location, but 30% of the underbanked or unbanked households here, 30% say they don't trust the banks.
And why should they? I mean, truly, why should they? I mean, if you don't have enough money. Yes, okay. So one is the lack of trust is much higher in Black and Brown communities. Yeah. And part of that is this history of, and I go through this in my second book, of truly just exploitative practices of, you know, taking deposits from Black communities and lending them to white communities, from you know, like some acts of true violence within bank branches to keep Black customers out. Before FDIC insurance, from just, you know, taking money and it not being there when you went back. And so a lot of this kind of gets passed down from, you know, grandparents to parents who say, don't trust those institutions. Like, they've never worked for you. It's a little bit like, this just lack of trust for police. There's just been so much bad behavior and so many instances of salient bad behavior that you just said, you know what, I'm not going to take a risk. That there are good banks, of course, but there's been so many instances of me being treated poorly that I'm going to take my money out. And then outside of the racial context, and this history is just very, very tragic and kind of shocking, but outside of that, if you're poor and if you have, I think the recent is, $2,500. If you can't keep $2,500 always in your account, and you dip below that, you're going to get these like penalties and fees, and they're going to seem random and punitive. Like they'll build, right? So you can overdraw and then get these fees stacked up. So by the time you go back to, finding out that you've had fees, it's already past, due, and you now owe $150. So that happens to you once, and you don't trust the banks with your money. So you'd rather go to a check casher, which is objectively more expensive, but it's a reasonable choice at that point, right? This is what I mean by I trust the poor to make the rational decision. And in this, the rational decision is I know the fees that you charge me. I know they're high, but these banks charge these weird fees. And I get these statements that are very hard to understand, and purposefully so. I don't feel respected when I go into a bank branch. They're not serving my community. They're not speaking my language, whatever the case may be. They don't look like me. So I just don't trust banks. So, that is pretty pervasive. And I also think that banks reciprocate that. They also deter certain clients. They don't want your $500 account. that's what the fees are there for. They do make profits from the fees, but also it costs banks the same overhead in, having the ATMs and having the tellers if you have $500 or $500,000. And they'd rather have the $500,000 because they can lend it, and you're not coming in every other day to take out money and put in your wages and dealing in cash. That's expensive for them. So they'll say, how do I get rid of this $500 customer? So I'm going to close my branch in the area where there's a lot of $500 customers, and I'm going to give them fees so they get pushed out, right? That's a business decision that they've done.
So, this is a sort of nice little segue to the color of money, black banks, and the racial wealth gap. I have to tell you, when I got your book, and UCI was kind enough to send it to me, I wish I could have read all 300 pages. I didn't. I read the beginning of the end. And I wrote literally a whole list of questions on black banking until I realized that actually the topic today was banking.
Yes.
No, it was good to do that. But let's touch on that a bit, because again, it's so relevant today. Now, if I'm not mistaken, the first black bank was actually formed less than a decade, I think, after the end of slavery. And since then, black communities have been urged by both black and white leaders to rely on segregated banks. But and even I read as late as 2016, there was even a Black Money Matters movement. Yet black banks have barely scratched the surface of closing the wealth gap. And today, I'm telling you what you already know, 5,000 banks, only 21 are African-American owned. I mean, who's to blame? Who's to blame? Do white banks bear a responsibility here too? And if they don't work, what do we do? Do we throw in the towel and do something else, or try again?
There's lots of good questions. So of course it's a white problem. And I think what the black banks, there are black leaders who have urged black banks for different reasons. So the 2016 black bank push was a protest. It was during the first Black Lives Matter nationwide kind of protest, and Killer Mike, who's a rapper, said, take your money out of these white institutions that are not serving you and put them in black banks as a means of protest. And Martin Luther King, Malcolm X, a lot of W. Du Bois, lots of leaders said, so let's be clear, until 1965, black individuals couldn't bank at white banks for the most part. So in heavy Jim Crow in the South, in segregated northern cities, it wasn't an option. And so you had to have black banks out of necessity, because you had to have black beauty parlors and black funeral homes and black whatever services you needed, because the white institutions, it's white water fountains, black water fountains. So the black institutions were formed out of necessity. And then in the book, I talk about how post-civil rights revolution, what's happened is that white policymakers like Nixon and post-Nixon have used this idea of black banking to say, okay, well, we'll have white banks and you have black banks. And instead of integrating, or at least integrating money, you do your own business and banking and all of that stuff. And the reason it hasn't worked is because the power and the capital have been in the white communities. And so you have, hundreds of years of Homestead Acts, FHA loans, GI Bill loans, and before that, Jim Crow, sharecropping, slavery, where wealth is extracted from black communities and literally not able to get mortgages to build equity because of these racial exclusions. And then you say, okay, without capital, you create wealth yourselves through banking. And I try to expose in the book, like, that's not how banks work. Banks don't make money out of thin air. I mean, they do, but they have to be part of a network of other banks. So it cannot be that you have black banks over here, building wealth while the whole society is doing this other thing, right? And not lending within those communities, not lending the right kinds of loans, right? Because the subprime market did come into those communities. So there's a whole bunch of factors here. And so I have nothing against black banks or black businesses, obviously. Very pro them, as opposed to, take your money out, put it in a black bank, don't put it in JP Morgan. But we have been putting the onus of a problem that white policymakers created on black communities to fix. And that is a problem. And when we do this a lot, we say, okay, well, policing's a problem. Why don't black communities meet with the police and fix this? And you're like, well, policing is a problem that the white suburbs created. Who pays the police? What are the police doing? They're keeping certain people, and this is a dark vision, but I think you really, you zoom out and you see it in that way. They're keeping certain communities over policed. There are certain communities that are over policed. Those communities are the same ones where the ladders up are broken, where the schools are underfunded, community parks are underfunded, and the public institutions that are most heavily funded are the police force, right? And so you go to the suburbs and and it's different now. So some urban areas have been gentrified, so you can switch that. Those are areas where the funds are actually going to other things that are life enhancing as opposed to criminalizing. And so I just think when we talk about these race problems, I want us to not think about them as a problem for the black community to fix. Right? Yeah.
I rattled off and threw to you rather a bunch of questions. I'd just like to circle it back to the last one. So, black banks arguably can only succeed if they have the support, arguably, of white banks. Mm-hmm. The optics of that are going to be odd, because if white banks do it, it looks like they're segregating them. So, is there a role for black banks, or do we have to let those 21 go and just make sure that we're more accommodating for blacks by white bankers?
I think there is a role, absolutely, for all black institutions. You talk to all, one of the things I found in the research is the black banks during the subprime crisis did not lend subprime loans to their communities.
Interesting, yeah. So,
these banks are not exploitative. So absolutely, in black businesses, all sorts of, that trust, going back to your question about your point about trust, I think black banks are trusted by their communities. And the reason why there's so few is because the capital isn't there. There aren't enough capital equity holders in black communities that are supporting or that can support a robust black banking sector. So absolutely, they're vital. Go ahead.
I'm sorry, I didn't mean to interrupt you. Where did the black banks and the CARES Act?
They hardly got, they were able to get PPP loans, but the businesses, if you look at the data, and an organization that I've worked with called Color of Change actually did this data on PPP funding and black businesses and showed that they were disproportionately deprived of funds. In other words, I think 3% of black businesses that applied got the loans. And something like 3% of Latino businesses that applied got the loans. That is a remarkably low percentage. And part of that is the relationships with banks, the size of the businesses. They tend to be smaller, less connected. So that also could have been predicted.
Very good. Well, I've monopolized your time. I'm now going to go to some of the questions that have come in. And we've had a question here from Martin. How do we get lobbyists for people to balance corporate lobbyists?
That's a really great question, Martin. There are a few. There's one lobby arm on Wall Street called Americans for Financial Reform that does really good work. And they basically are in a defensive posture at this point in the last 10 years. And they basically just try to block bills that banks are pushing that are deregulatory. They're hardly staffed enough or well-funded enough to fight this stuff. So there are a few lobbies. But, I will say this, politicians care about money, but they care more about votes.
Yeah.
And money equals votes, but it doesn't have to, right? It doesn't have to. And so I think voting and being very vocal about the kinds of politicians, the kinds of policies we will support with our vote matter. And then fighting voting disenfranchisement. Really, you can't, people do get voted out of office. Look at Orange County, Katie Porter. Katie Porter is a true fighter of banks. They probably cannot stand her. And if you've seen her dress down any of these executives, I guarantee they cannot stand her. They hate her. But the citizens of Orange County gave her that platform. So I think, and I'm sure she was not, I am almost 100% sure, no lobbyists, no financial lobbyists are paying Katie Porter. She's not bought. And then there are other Congress men and women and senators who are more aligned with the principles. So find those people, and then for the other people, vote them out, be loud. Votes at the end of the day, that's what they want.
Get out the vote too.
Yeah.
All right, so these came in before. I'm going to read this one to you if I may. Banking institutions applied and received much of the early COVID-19 CARES Act funds, and after public pressure are now providing applications for smaller businesses for said funds. With the history of banks and their plundering of marginalized communities in mind, what are your thoughts on better options for saving small businesses in the future?
Absolutely. Yes. Go around the banks. What we did was, here's the funds, here are the small businesses. And we could say, we want to save the smallest businesses. Those are the ones that can't survive this, right? So Shake Shack is an example of a public company that took out PPP loans, and they got the shame that they deserved. But the part of the reason why they shouldn't have taken out the loans is that they can go to the capital markets to get the money that they need, and they stayed open. So they actually didn't need it, where there's a ton of small businesses who you close down for 3 months and you will not survive. And so the PPP, those were the businesses, and a lot of Black and brown businesses are small businesses just by nature. So if we want to do that, here's the money, here's the businesses that should be the target. And we know that if we put that money through the banks, it's going to filter up. That's what banks do. They're going to choose their highest wealth customers. So get rid of that middleman and send it direct. And we know the small businesses, they're all registered at the SBA. So just send the money from the SBA to the small business. It's not that hard. If you're worried about fraud, which tends to be rare anyway, because you can go to prison for fraud. So, you really, have to be a fraudster. Yeah. So you're talking about really unscrupulous people, which most small business people are not. But, you can verify the documents, put the bill, you don't need a bank for that. So that was a solution that I think could have worked.
Okay. I was also asked to ask you, has the Federal Reserve Bank's political independence been further eroded over the last 3 years? That's
interesting. Yes, I think that's been fascinating. So one of the things that's happened is Chairman Powell and a couple other Fed presidents have done a listening tour at communities across the country, which I think is long overdue. But the Fed has tended to be, especially under Greenspan and certainly under Bernanke as well, been very much like, I'm just going to look at the numbers and do the technical stuff and not worry about politics or people, and the independence really shielded them from that. But what happened during the financial crisis and pre is actually they weren't really that independent. What they did have is a lot of input from banks and not enough from communities. And then the political process, I think they do feel that. I think the Fed, some people say, oh, the Fed is so hyper independent that they don't care. They do care. They're humans. They can be removed. I mean, Trump removed Janet Yellen, which was crazy, unprecedented. I don't think that gets enough attention. No president had come in and just changed the Fed head just like that. And he just didn't like her and got rid of her and put in Jerome Powell. But I think Jerome Powell is he's been susceptible to that public anger and distrust. So I think it has eroded the public's appetite for hyper-Fed independence. And I think that is deservedly so, because they were never independent. They were just independent from certain groups. And they should be paying attention to municipal bond creators as much as, repo markets, and they were very unidirectional in the voices that they were hearing.
Yeah, I know. I read that last April. I think you're right. He was down in Mississippi, and he actually went down there to look and see what was happening, which was kind of encouraging.
It really was. Yep.
Okay. I am particularly interested in which advocates for very small businesses who may not belong to trade associations and the like influence the development and implementation of the legislation, and also what lessons the supporters of the legislation feel they have learned.
From the CARES Act?
We're going to assume it's from the CARES Act.
Yes. I think when policymakers came back, they did try, they did learn that, and they probably knew this, but they kind of did patch up some of the leaky holes here. The idea that these big companies were taking the funds and then laying off workers and things like that. They made the quid pro quo a little bit more demanding. They came back this time and cut some bigger companies out. I think the Fed, again, creating this small medium-sized business facility is them listening and having an iterative process. So I do worry that the appetite for reform has shifted. As one of the things I was saying during the congressional hearing, because we actually had the congressional hearing over Zoom, so the congressmen were zooming in from their different places, and usually when you're sitting in the chamber, you can tell who's a Democrat and who's a Republican by where they sit. But during Zoom, they're not, identified as such. But all the Republicans started their comments by saying, it's crazy that we're not at the Capitol. We shouldn't be doing this anymore. This is over. Blah blah blah. So what I worry about is that people are in this frame of mind that virus is over, that the crisis is past, and that is just not the case. I mean, looking at some of the spikes in some of the places that are back to normal, we are still, in a crisis, and I hope that the appetite for reform hasn't shifted.
Well, that's actually a very neat segue to what must be the last question, because we're almost on time. And that is, so in summary, what are the key lessons we have learned from the CARES Act and COVID-19? And in terms of banking for all. So we hope, whatever it is you want to hope with, this doesn't happen again. But if so, what are the lessons we've learned?
Okay, so I'll do the lessons of COVID, and then the lessons of the response to COVID. The lessons of COVID are that crises, I have an adage in the book, right? When Wall Street gets cold or the flu, Harlem gets pneumonia, and we talked about this before. But crises are not equalizers. They are they divide, in that those who have wealth, you saw this very clearly during this crisis, protected themselves, could protect themselves. They had the ability to be home. I have been working from home since March without any financial suffering for us. We had that ability. Some of the New Yorkers that I know went to their summer homes and just kind of camped out. They had enough wealth, even if they did lose a job, which most didn't, they could sort of withstand it. They didn't have to be out there on the front lines. Whereas poor communities, they're more likely to be service workers, less likely to have the healthcare needs, more likely to be in crowded situations where they're more exposed to this. So the crisis only drew those gaps further. And then when you're on the margin, a small sort of win can tip you over into foreclosures. And so I think that other shoe has yet to drop is evictions and, you know, kids going hungry because they're out of school, and the effects of just a prolonged crisis on, you know, further sort of sharpening the edges of poverty. And then as far as the response goes, I think you saw immediately, I don't know if this was so long ago, but the weekend after the economy just kind of tanked and you saw all of these employment numbers just spike, the Fed, you know, issued like a $3 trillion program for repo markets, commercial paper, you know, banking, sort of just liquidity into markets. Overnight, they just kind of, every program that they created in the year of 2008 to 2009, they unleashed in a weekend with the same monetary power behind it. And so that, I think, was the first sign where you're like, oh, the banks are going to come out of this just fine. And the how long did it take for Congress to get up to speed and to help people? So I just think we know how to save, or we know at least how to try to save big companies and big banks. It's easy. There are buttons to push. There are liquidity funds to issue. But then when we try to give liquidity to people, the mechanisms aren't there. So part of it is that it's just the institutional ability to just like send $1 trillion to repo versus, you know, $1 million to people, you know, through $1,000 check. That infrastructure isn't there. And so I think that is a problem that has been present and was heightened during this crisis.
Post office and debit cards.
Among many things.
Among many.
Yes, and reparations, yes.
Well,
yes.
According to my watch, we are on time. So I want to thank you, Mehrsa. You know, to that long list that I introduced you with, I would like to add brilliant, insightful, passionate, and we are so glad that you landed with us here in Orange County.
I so appreciate
Richardson
that.
Song, thank you very much for making all of this happen, and for all of those who facilitated, and those of you who sat in and listened to what for me was just a glorious conversation. So thank you very much.
Thank you so much, Michelle and Song. You're muted. Shoot, we can't hear you, Song. Always happens. Always.
Thank you for such an incredible and informative conversation. I want to thank for taking the time to address and inform and educate our broader community. So thank you so much. And I want to thank all of you for joining us for this COVID and the Law series at UCI Law.